Good afternoon, traders. This is Christian from Hertz Market Trade Group, and it is Monday, February 22nd. Pretty interesting day. I think that's one way to describe it first. Uh, things all over the place. Today kind of started a bit with a rotation. I call it a move more into from growth into value. But I'll tell you, whenever we see these value rotations, they are very bumpy. And it was one of the things that I said this morning. We started to see things like the travel names, a lot of reopening trades, and a lot of value trades, and a lot of things move based on what's going on in interest rates and yields. Big impact there with the Qs. So when interest rates tend to pick up, there is this relationship right now with the faster that TLT goes down, the faster the Qs go down right now, right? They are heavy growth. And there are things like dividend discount models or discounted cash flow when the interest rates are in the denominator, right? That makes them more expensive. Hence, there's that So there's that natural rotation based on that. I don't know if I would call it natural rotation, but there is a rotation based on that. And then you also have what's going on too is we're hearing about a lot of things kind of reopening, right? And we've seen this trade before over the last year, but it's been kind of spurts of it, right? We didn't really have the vaccine before, and we're getting more positive news in terms of the company of the of the country reopening. And we're hearing things like, New York City, which is where I am. We've heard that, hey, they're reopening inside restaurants 25%. Then they just made a jump that said it's going to be 35%. So very quickly. And then the governor of New York said today that they're going to be opening up. What do you call it? Theaters. So AMC got a boost from that, but I mean, we haven't had that happen, and it's been a year, right, since that stuff has been open. We haven't had theaters, movie theaters reopen. So, these are big changes, right? And it's hopefully these changes are not going to go backwards, right? We saw that earlier that in the summertime when things reopened, but we didn't have the vaccine then, and we have the vaccine and more positive news coming out. So this does feel a little bit different than what we've seen before. There's going to be and there are these changes, and the market is moving fast to kind of account for that. So first things first, I forgot to read the disclaimer, but everything that we're going through is for information purposes only, not giving out any advice or recommendations. This is for education purposes only. Also, if this screen looks blurry to you, don't worry. First of all, this video takes time to render, so I know that YouTube, it takes time for that. I also take a screen print of this and put it on Twitter, so you can follow along with what some of these performance. I mean, you got deep green and you've got deep red, right? So energy names, those got going, very decently for the day. Metals and mining, right? These are a lot of things, by the way, that if you did your homework over the weekend, you realized that these charts were shaping up pretty decently. We know that we've already gotten a move in the energy names, but things like the airlines, things like the banks, things like the industrials, we talked about that in Friday's video. So that really should not be much of a surprise. The transports, they finished up on the day. So a lot of groups finished, pretty decently in green today. And if you look at the diamonds performance, right, DIA, which is the Dow, that finished green for the day. So, just what I talked about with a couple things hitting, growth names and tech all at once, and you got a big move down there, down 2.6% for the day. But again, it's very different than what we've seen with the usual sell-off, where kind of everything gets hit and there's some things that outperform a little better, some things that's worse. This is a lot different, right? To see some things as green as they were today. Just big rotation out of a lot of things that have worked over the last year versus things that have been kind of closed. So we'll look at some of these charts. Before I kind of get into that, right? And what did I miss any steel names too? And I really tried to put together, our watch list trade for this week. I try to really include. I didn't include energy because I thought it was overkill. hindsight 2020 would have been nice to put in a couple energy names into that, considering that they were up, and rallied basically throughout the trading session. They closed on the highs, right? If you look at so let's look at OIH for example. And they're underowned, and that's the situation. So it didn't close right on the highs, but you could see up 4.5%. And again, you would look at this chart and you'd be like, oh wow, the market must have had a pretty good day to it, right? But it's really a lot of areas that are underowned because of what we've been dealing with over the year, and it's pretty violent rotation there. And again, it is very bumpy because I didn't fully explain that. Why is it always bumpy when you have a rotation out of growth and out of tech? Because those areas are bigger part of the market, right? So if you look at the S&P index, for example, right? So let's bring that up. And if we do this, and if you look at the biggest components. Right? What's the biggest component? And we'll sort this by weight, but it's tech, 27%. 20% of the S&P 500 is tech, right? How much is energy? Not even 3% of the S&P. So when you see this move out of growth and tech, consumer discretionary, right? You're talking about 50% of the index. If you throw in communications too, which is Google and Facebook, it's a lot, right? It's a big component. And what happens when people start to sell and get out of these areas? Well, high frequency guys, they see the selling, right? And they jump on for a ride to the downside. So it is tough when this happens, right? Especially if you've got, listen, everybody's got some growth names on someplace, so you can't escape it. I love the guys on Twitter be like, oh, I don't have any exposure to any of this stuff. Really? Because you don't have anything in your IRA, you don't have anything, right? There's a joke I remember seeing a couple years back when one of these guys on Twitter who's got a bunch of follows, like, I don't have any Apple in my anywhere, and I'm like, I responded to this person, I'm like, you don't have any equities in, you don't have any ETFs or mutual funds in your 401k or your IRA because you own it, you own some of this stuff. It's just part of how it's how funds are situated, right? You got a big proportion that's allocated to growth and to tech. So you're going to feel it somewhere. If it's not in your trading account, it's in one of your long-term accounts too, because it's impossible not to have any of this stuff, right? So that's just how it works right now. Here's a chart as well of what did I want to talk about next? Did I cover everything that I wanted to in here? I think we did. The performance, you could see some things really got beaten up. We talked about how remember last week's videos where I talked about how the Chinese internet names were really overbought and need of a correction. Well, you got it. Down 5.6%. So these things were coming, right? We've talked about before in some of my previous videos the last 2 weeks, when things get super overbought, once they kind of come off those levels, it's a decent pullback, and it stings a bit, right? Down 5.6%, right? And this is where, so this was specifically what I went over last week saying, hey, this group needed to come in and come down. I even said the 20-day moving average. So I forget what day I mentioned it, but I think I actually mentioned it twice in my videos last week, just saying, hey, and again, I'm long this group, right? I'm long the Chinese internet names, KWeb. That's in the TTG Trend Portfolio. I'm also long emerging markets, EEM, and I'm long another international ETF, right? But that's all part of the plan, is to see pullbacks and uptrends, right? It's just part of the game. Other areas that really got beat up pretty hard today, internet stocks, the FDN ETF, and that was another one that we talked about, which was extended. That got down 3.3% for the day. Look at the solar stocks, got hit, down 9%. So dirty energy did perform much better than clean energy. Right. So again, there's been a huge outperformance in some of these areas. Biotech fell another 3%. That was one of the first things that I saw last week. That was weak. Pot stocks down 3.7%. The semis also. So again, higher beta areas, higher valued areas really got beat up. Software, if I didn't mention it, down 3%. If you look at the ARK ETFs, big volume in some of these. Down, most of these down over 5%. Again, I would also chalk these up to really overcrowded. We've seen, look at the fund flows over the last couple weeks. Heavy crowded space right now. So, the air coming out of this, and I think that this was the biggest volume day for the ARK Innovation ETF on record, right? So this stuff, again, this is what happens when trades get really overcrowded, is that when they come undone, they really come undone. So here's a chart too that I wanted to talk about: value versus growth. This can kind of help you see a little bit, and helps me see, how far growth names have outperformed value, right? This is 2 years, but if you want to go out to 5 years, right, you could see that, there could really be a decent move further at this point into value and out of growth, just to get things back to even this downward trend, right? Which was like, even to this 0.7. So it tells me that there could be a lot more, money being rotated into value. Given the level of this, right? And if you want to look at this further, so again, this is IWD, IWF, right? This is large cap value in the numerator and large cap growth in the denominator. I can show you the other one too, which is small caps, but it's going to have a similar look and feel to it. All right. So what this means to me, right, is that, while this is taking place, is to own other things besides just straight up software, high growth names. It means be a little bit, have a financial, have a bank in your portfolio, have an industrial, right? You could still own quality, right? But for me, again, I can't tell you what to do because I'm not giving advice or recommendations. But I think that this can continue to retrace some of these levels that have been kind of buried down here because of what we've been dealing with COVID for the last year. Again, and I hope that that this is a good thing that the country is reopening, right? People can travel, people can do things. So we talked a lot about the Jets ETF, JETS, Jets was up another 3.5%. Even things like, I think Boeing did finish in the red today, right? But and it did, right? And it wasn't able to close above value, so it did finish down 2% for the day. It actually went green for a little bit. So I was thinking that, hey, maybe the stock at this point is absorbing the bad news, which is usually a good sign, right? When a name has gone down for a while, right, and more bad news comes out and the stock rallies a little bit, it's a very good thing in trading. Forget about all the implications about I had people on Twitter tell me, "Oh, this market's crazy because how could Boeing be up?" And they had this happen yesterday. It's just it's really not like a crazy market. It's just how trading works, and it's not because of it's a relationship that has worked over time. When a name gets hit really hard for a long time, and they come out with another bad piece of information and the stock rallies on it, it usually just means a lot of the bad news is priced in. There's nothing to do with now we are in a crazy market, but that's another story. All right, so that's a little bit of what I think are kind of the major themes that are playing out here. And if we look at the Qs, which again got hit the hardest today, we are into support here at 322. So what do we do at this point, right? We broke the 20-day moving average. We did fall in here, so we're just going to have to see if this support can hold. It's too early to say, hey, we're stopped at the top of value. Same thing with the S&P, which finished down 70 basis points. A couple things that three levels that I talked about in our morning note was that if we fall further, 3834, right, 3834 in S&P futures. There's a level down here which we didn't take out this morning, and I actually wanted it to be taken out, which is going to be 3855. We'll just wait for this to come up. It's a version point of control, and Thinkorswim takes a minute to crunch the data. But you're going to see, so 3855 will be the first level. Let's make sure I've got the right thing. Yeah, it'll just take a second here to come up. And the other thing to kind of, as I'm waiting for that virgin point of control to come up, to realize that last week was a tough week, right? So we'll talk a little bit about that. Well, it's not going to show me this, so I'll move on because I don't want to hold up the video. But there is a VPOC down here. There it is, 38.55, right? So that's the first downside level that I would be paying attention to. The next is the one that I mentioned on the daily chart, right? And then further, we've got another downside one down here. Now, also take a look at the price action of the day. This is something that I talked about in the mornings in the pre-market session, is that we could possibly, we're kind of in where we were this morning. We're in no man's land, right? Because we're below value and we're between this prices between value and this VPOC. And I said a couple things could happen. I said probably 3 different things that I was mapping out. I said number 1, we go down and we take out this VPOC. Well, we didn't do that in a straight line. Number 2, I said that we could go up here, test the bottom of value and fail. It looks like that's what we've got. Number 3 was that we could continue to kind of climb and get into value. But I'll tell you, the MarketWebs, right, which somebody asked me the other day, why do I keep saying in value? Well, that means when you're in value, right, you are within the range for the week, right? Again, the value areas are based on the previous period's volume, price, and time, right? So this value area for the week, right, between 3,897 and what is this, 3,830, right? That is based on roughly one standard deviation of price, volume, and time, right? The time is 1 week, right? Because I'm on the 1 hour chart, so this value area is what we have for the week, and that's based on the price and the volume. So it becomes very significant, right? And you could see that it is, right? We rallied right up into the bottom of value and got rejected. So what does that tell us? That we're trending down, and we try to retake that trend, and we weren't able to do it, right? Even to get sideways, not the uptrend, but to get sideways. Again, short-term stuff. But we're trending down for now until we get over 3,897. We're in again, short term, right? Short term stuff. So we're back down here, and these are the levels that we have to worry about until we get back above 3,897. All right, so let's take it a step further. So that's the S&P, right, with the biggest names in it. We didn't talk too much about. I haven't talked about bonds. I didn't bring up a chart, but at one point, bond futures were basically flat for the day. They didn't finish that way, right? So again, the faster that bonds go down and interest rates go up, it is a little bit of sticker shock, right? And that's what we're dealing with right now. And I've said this before, and someone corrected me the other day, and they said, "Hey, well, you weren't worried about this a couple weeks ago, and you were making fun of it." And that's true, because I didn't think up here that we had much to worry about unless we started to move down fast, right? And I said that the market doesn't like fast moves. So that's what we have the last 2 weeks is a fast move down, right? And that means a move higher on the long end of the interest rate curve. All right, so Powell does speak tomorrow, so we'll see what he does. In terms of positioning, right, even though I think that value will do better, I still think that I still think that it's going to cause hiccups because growth is such a big component of the overall market. So that's something to watch out for. So what did I do? Well, I was a little bit in buying the dip, and I wanted to get some trades on in terms of the industrials and some of the charts that I really liked this weekend. So I tried a couple things. I try to go to my go-to names. I tried Taiwan Semiconductor. You could see that later. I bailed out of it. I just really learned to try as much as possible to get out of the way. I put on some IWD, which is that large cap value ETF. I got out of it. I got out of that for a little bit of profits. I was in DuPont. So you'll notice that I really, if I was in any call position, any option positions, I want to get out of those option positions pretty quickly. So I moved from about today, I was in about 60%, yeah, 60% cash, and I moved to about 80, 85, about 80% cash. I'm about 80% cash from what I see. So, and these days, I'll tell you, if you had a bad day today, or a bad week, because I think last week was tough too to trade. I finished positive for last week, but not by a huge margin. It was a tough week to trade. So if you had a really tough day today, these days are going to happen, right? And I think everybody knows that this market has moved up in a crazy manner over the last few months. So yes, I think everybody knows that some type of dip correction was coming, right? So let this play out a little bit. I've learned that, hey, on days like this, I'm going to lose a little bit of money. I'm going to give back a little bit of money, but you live to fight another day, and you respect the price action, and I think that what will happen is we get further. And again, I don't know if we're going to be down tomorrow. I don't know how tomorrow is going to materialize. But what you'll find is on these dips, the further down some of these growth names go, the more they're going to be buying opportunities. So there will be some good opportunities, I believe. I'm not sure this for the rest of this week or the next couple weeks, but you have to be ready to deal with that. And if you get out of some positions for stops, so be it. Listen, I'm always happy to go through some of this stuff. I got creamed in this one position, right? This Uber, right? I got into Uber. There was a big call buyer about a week ago, 2 weeks ago, not last Friday, the Friday before. Huge call buyer, September calls. Looked great. I'm like, okay, should kind of consolidate here and then push higher. What happened? It's just gone straight down. We actually saw a lot of restructuring of Uber calls on Friday too, right around options expiration. This thing's down 5%, right? I don't care how much call buying happens. If it's going to go down, it's going to go down. So I stopped myself out of this trade. It's the last thing I want to do is take a loss when a stock's down 5%. But, there's no point in me getting just bleeding money in an option position. I would rather be out of all option positions or close to it, because that's where you can really shoot yourself in the foot, is putting on call positions when the market is going against you. Stock positions are a little bit different, right? I view them as actually less risky, because as long as you're setting a stop price and your price goes through the stop, you should be taking it off, right? You shouldn't be sitting and moaning about it and saying, "Oh, I don't know what to do. I'm not going to look." You gotta be a big boy or big girl and take the position off, and minimize your loss right then and there. It's a big part of trading, and I've heard a lot of people who've kind of summarized their years. We've had the U.S. investment champion of 2020. We had him on a couple weeks ago as a webinar, right? He cuts out of his positions, right? He talked about what he did back. And again, I'm not saying that this is going to happen. I don't think this happens at all. But the market is allowed to dip, right? But if you can minimize some of these big red bars, and then just live to fight another day, right? Nobody knows what's going to happen, in the market day to day. So when you respect price action, right? And if price action looks really, really ugly, you get out of the way, right? Rather than if you stick in it and stay stubborn, that's how little losses can become big losses. And that's why I'm kind of like, I'm not happy that I lost money today, but I understand it's part of the game, right? And today's a bad day, but I can make up for this because I made the right decisions, and I can make up for this in a day or a couple days. And this happens to me where sometimes I take a hit in P&L, and a couple days later I'm back at 52-week highs in P&L. So it's just part of the game. And if you're struggling with this a little bit, just realize as a trader that you're going to have days where the market goes down a lot. And I will tell you the other thing that's particularly difficult when you look at the Qs for the day is how many times have we seen a dip in the market and buyers come back in? Right. Well, the buyers didn't come back into the Qs today. They closed on the lows. So it's a little bit different, and sometimes we don't have that muscle memory. But that's why you kind of these down days are actually where you learn, right? Nobody learns much when the market keeps going up, right? Everybody's a genius then. Where you really become a good trader is on days like this. I hate to tell you that, but you know, but if you listen, everybody wants the market to, when they're positioned long to go up, you make more money. But really, if you want to learn trading like this, you don't run away from it. You confront it and say, hey, market's having a bad day. How do I make adjustments to counter, when it's a better environment? All right, and that is the whole key, in my opinion, is to have that dry powder available so that when there are the buying opportunities, you're there for them. Right, and this could be right. The market falling this much, 2.6%, it could be, but I particularly like to see the evidence, the confirmation first that buyers are stepping in. And we certainly didn't see that today in the growth areas. All right, guys, so that's it for today. Again, if you had a rough day, so be it. Get over it and be on to the next day. All right, guys, have a great night. See you tomorrow.